Hey, this is Tom, and this thing can literally send Tesla to $450 per share. I always start with the bottom line first. As you can see, here's the bottom line. DCF value of $450 today. Not a price target in a year, not a price target in 5 years. Today, $450. All it needs is one little catalyst to actually materialize, and it's not that far-fetched. Before we talk about that and all that good stuff, let's start with the basics first before we go through the modeling and everything. The first question I get asked almost on a daily basis right now with Tesla, before we go to that $450 price tag, is like, Tom, is it a good idea to buy Tesla right now? Look, it's up 600%. Dude, it's not up 600%. It's up 64% over the past 3 months. It's still down significantly. It's down 12% on the year. And in fact, it pulled back from 300 all the way to 260 lately. So it's not expensive. It's not overpriced. If you look at the stuff we have here on Stock MVP, by the way, this whole video is powered by Stock MVP, as you can see on the screen. But if I scroll down here, look at the ratios, right? Price to sales of 9, price to earnings of 67, 68. If we compare this to NVIDIA, I mean, this is absolutely insane numbers. Look at NVIDIA, which I think is not as good of a company from an AI perspective as Tesla. I mean, NVIDIA has a lot of AI capabilities, but I mean, comparing it to Tesla is kind of funny. Look, NVIDIA is definitely a great company, but let's hold the horses here for a second, right? So NVIDIA is trading at, let's say that NVIDIA is as good as Tesla, right? Let's not say anything is better or worse. So if NVIDIA is as good as Tesla, right? Look, NVIDIA is trading price to sales of 44, price to earnings of 240. I mean, come on, dude. I mean, Tesla is not expensive. So first of all, let's get that out of the way. The current valuation of Tesla is not expensive based on what you're getting, right? If you're buying a Corvette, you're buying a Porsche, you're buying a Tesla Model S, I mean, yes, it's expensive compared to a Corolla, but you're not buying a Corolla, my guy. So number one, that's the first thing we have to talk about. So, when in doubt, zoom out, look at the year chart. I mean, it's not expensive. 260, look at the ratios, look at the multiples. And by the way, we just uploaded a lecture to our Patreon page and patreon.com/Tom Nash for Academy members. There's one final spot left in the Academy before we move up to the $100 tier. So we just uploaded right now a lecture a few minutes ago about how to do relative valuations, multiples, and all that good stuff to complement DCF modeling. So check it out. It's on our Patreon page. So basically, number one, Tesla is not overvalued. That's just the kind of a premise I want to explain here. Number one, before we even talk about, in-depth stuff. Tesla is not overvalued. Look, the other thing about Tesla, before that 450 price tag, is that you have to understand that there's not a lot of companies out there like Tesla. Even NVIDIA is not as good in that metric I'm about to tell you right now. Tesla is financially bulletproof. It's sitting on a pile of cash. It has no debt. It has an insane amount of demand and the best margins in the business. It's literally bulletproof. If there's good times in the economy and people are spending, Tesla is going to do well. If there's bad times in the economy and people are not spending as much, Tesla is going to get wet, but they're not going to drown like Ford and GM and the other companies. So Tesla is very much set up with demand, the amount of cash they have, with the cash flow they have, with the margins. Look at their free cash flow, $1 billion, no overhead because they don't spend on advertising. They don't have dealerships. So Tesla is very, very financially sound. Whatever times are, happening, Tesla will be okay. They'll do better in the good economy, but they're not going to drown in the bad economy. And as it stands right now, Tesla is already dominating the global stage, definitely in the US, North America, but even on the global stage, Model Y is already the best-selling car in the world. And they don't even have a truck yet, which is the most important category in the United States. They don't have a $25,000 car yet out. They're already dominating. Imagine what happens when that thing adds. But now let's talk about that one thing I do want to point out to, which is the one thing that's going to send Tesla, through the moon very quickly. Currently trading at $261 right here. So look, Tesla is literally one full self-driving licensing deal with a large OEM away from hitting $450 per share. We saw Ford, we saw the other companies, we saw everybody succumb to the Tesla supercharger standard. So Tesla has already become an industry standard in charging, in EV charging. The next thing is Tesla becoming an industry standard in FSD, full self-driving, autonomous driving, driver assist, whatever you want to call it. I mean, they don't have competitors. You have the Intel subsidiary called Mobileye, which is light years behind Tesla. Nobody has capabilities. Nobody has the mileage. Tesla has so many more miles every single day. So the gap between Tesla and everybody else is not just huge. It's getting bigger by the day. So at some point, it's inevitable, not a question of if, but when, at some point, there's a large OEM, like Ford did with the supercharging, that's going to come in and is going to basically say, hey, Tesla, sell us, license to us your FSD. We're going to put it in our cars. Once that happens, the floodgates will be open. Because right now, Tesla is basically trading at 50% growth, right? The assumption here, if I do 50% growth, look, it's a $322 stock, right? Let's adjust here the discount rate to 14%. And let's look at what we have, like $250. Okay, so Tesla, based on the 50% annual growth right here, and based on 14% discount rate, is trading at $250 per share. Okay, cool. Okay, so that's the current trading volume of Tesla. It's around that price. Now, let's assume that FSD comes in and, somebody licenses out FSD. The moment that happens, you have to adjust your revenue growth perspective. I mean, you cannot stay flat on 50. So even if you do just 60% revenue growth instead of 50 because of FSD, and obviously you have to adjust the discount rate because the discount rate as it stands right now, the banking crisis is over. The Fed is towards the end of their hike cycle. So, at the end of the day, you cannot keep discounting at 14% Tesla until 2028. So you probably have to adjust to 12%. So if you go to 60% revenue growth and 12% discount, based on macro and the FSD deal with the first OEM that's going to come out there, populate, calculate, thank you, stock MVP, $448. So the moment the next OEM comes in and says, hey, we're licensing FSD, Tesla's a $450 stock right there and then, this minute. Not even talk about the fact that the energy business of Tesla is going to be way bigger than all of this combined. Look, not talking about the fact that I have a price target of $1,420 for this company. By the way, the 1420 was absolutely accidental. I didn't even know this. Let's leave this aside. So based on the most conservative estimations right here, we're talking about a company that's, literally a whiff away from 450, trading at 260. So that's a 72% upside in one very probable event. Look, don't be Cramer. In 2010, Jim Cramer told you 13 years ago that Tesla is all hype, Tesla is all air, and he told you to stay away from the IPO. If you listen to Jim Cramer in 2010, you've lost on 21,000% of gains. Give Tesla its clout. Give Tesla what it deserves. Tesla is literally one FSD deal away from, blowing the lid out of the stock right now. So again, this is not financial advice. I'm not telling you to buy or sell the stock. I'm just saying my own personal opinion is that Tesla could be 450 very quickly, assuming FSD matures and gets licensed out. It can happen within the next 6 years, within the next month, within the next year. We never know with Elon when things are ready. But I think at the end of the day, ask yourself this question. If you think Tesla is expensive right now, why invest? Well, even if you think Tesla is expensive right now, why invest? Because in 10 years' time, Tesla is going to make you generational wealth. I mean, at the end of the day, again, nothing is certain in life except death, taxes, and Tesla. That's how I personally see it. My own personal opinion, not advice. My own personal opinion that if you invest in Tesla today and you have the patience and you don't need to take out the money and you can stomach the volatility, in 10 years' time, putting money in Tesla is going to make you a very nice return. Again, not telling you to buy Tesla. All I'm saying is that even if you ignore that FSD stuff, even if Tesla is just a car company, if Elon leaves tomorrow, Tesla stays a car company. They don't develop anything else. They just remain the Model 3, Model Y for the next 5 years. It's still going to give you 10% a year, basically, which is the S&P. So the floor of this company is the benchmark, the S&P index. But it has so much more upside. It's absolutely exciting. A huge shout out to the Tesla community and everybody who educating the retail crowd. And at this point, Tesla is kind of it impressed me so much over the past few years. The retail investors are now more educated about Tesla than institutional investors. And unfortunately, institutional investors lost a lot of money by not participating in this game. It kind of is changing right now recently. I've showed you this. Tesla on the institutional side, it's happening. It's happening, and it's happening quietly. Institutional investors, they don't like to tell you when they're pummeling into a stock because they don't want to pump up the price. But just go on Stock MVP, scroll down on Insider, look at institutional shareholding, and you're going to find what's going on with Tesla over the past 2 years. Look, even over the past year. This is institutional shareholding. I'm not even going to say anything. This chart tells you everything you need to know about how much institutional investors are buying Tesla recently over the past year. So, don't say I didn't warn you. And a huge shout out to everybody who came in today. Thank you so much. Of course, don't forget to check out our Patreon, patreon.com/Tom Nash. One final spot left for the Academy. Whoever grabs it gets it at 35. Next batch is 100, and then we're going to raise it again and again because it's an expensive course. Thank you so much. I'll see you in the next video. Huge shout out to everybody.